All right, what's going on, ladies and gentlemen? Just waiting for a few people to join in here. We'll get started soon. I apologize for the voice. I'm just coming off of COVID. It was not any fun. Excuse me. Let's see. Good morning, guys. Good morning. Yeah, I'll be going over GJ today. If you guys want to drop some pairs in there that you want me to discuss, be more than happy to. Remember, we have FOMC news today, so just be wary of that. It's going to create a lot of volatility. Normally before FOMC, we see a lot of choppy price action. That's just normal. Let's see, guys. Drop some pairs and you want me to discuss. Drop your location. Let me see where you guys are from. I love seeing that every Wednesday morning where you guys are located. I'm going to wait just a few more minutes for people to kind of trickle in here, and then we'll get started. All right. Got Germany in the house, Australia, nice. Man, it must be early in the morning for you, Australia. Got 2 Australians in here, awesome. Yeah, I'm from the East Coast of the U.S., so it's a little past 8 o'clock in the morning on Wednesday. Cape Air, nice. That was 10 p.m. Okay, I get my times mixed up. S&P 5. I'm not going to go over any indices today. I don't like indices. I don't like how they wave. I'm more of a Forex only person. I'll go over USD CAD though if you want. Yeah, Aiden is having a little bit of Wi-Fi connectivity issues this morning, so if he's able to hop on, great. If not, I can just take over for him this morning. USD CAD, yeah, we'll go over that. South Africa, nice. Vancouver, Canada. Canada's beautiful. I have some lake cottages up there, just north of Ontario. GU, yep, we can do GU. Awesome, guys. Any other pairs before I get started? It's sometimes hard for me to see all the comments as I'm breaking down these pairs so quickly. If you have any pairs, let me know now so I can write them down. Again, for everyone who just joined, I apologize for my voice. Just getting off of COVID. Has not been fun, but we keep pushing on. Bitcoin, oh man. UJ, yep, I'll go over UJ. Appreciate the love, guys. Bitcoin, I don't like Bitcoin at all. It's way too erratic. Everything follows smart money concepts. Everything is moved by the big banks. In terms of volume and liquidity, it's just smart money. Bitcoin is very difficult to see it clearly. Same thing with gold. Guys, I like to focus on Forex pairs only. If you guys like gold and NASDAQ and Bitcoin, all that stuff, I wish I could help you there. I just don't know those enough to be able to provide enough value. I stick to Forex pairs. They're a lot easier to see smart money moves. Yeah, definitely USD CAD will do that. Let's see. We have GU, we have GJ, we have UCAD, we have ECAD, G-Chef. Yeah, I can do some G-Chef. Appreciate you guys. All right, I'll get started here. We have about 50 people joining in. I'm sure people will continue to trickle in. So yeah, let's do it. Let's get started here. Let me share my screen. Now I'm going to first go over some pairs. First and foremost, can you guys see this screen? Can you guys hear me okay? Just want to make sure everything's good before I get started, since I don't have Aiden on here today. Just someone say like yes or no in the chat so I can confirm. All right, cool. Awesome. Let's do this. So let's first start off by talking about AUD USD. I'm sorry if I can't get you guys in full screen mode. Wish I could click on that at the same time and do it. Yeah. We might just have to be in, I don't know, if this is full screen, awesome. If not, I apologize. I can't really shift over to full screen and then over to my chart. So we'll just work with what we have here today. So with AUD USD is very interesting because we did come into a higher time frame level. As discussed before, if you guys have been, especially if you're a part of VIP, you would know, we did come into a higher time frame area of demand here back from 2020 during COVID time. The 6682, 6683 level, we filled the imbalance, and we can see the sensitivity surrounding price here. Support, 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 turn resistance, resistance. Now we turn back support again. So this is that key sensitive region of price on AUD USD that I have been wanting to see. And all the way over here, we came into that perfectly. So we were, we're still currently in a bearish market, as we know. We're making lower lows, lower highs, lower lows. But we have bottomed out here at that objective region. And now we're starting to move away from it. So technically, yes, we still are overall bearish, but currently right at the moment, we are counter trend bullish. So we want to be looking for buys. The dollar index is, I want to see lower prices just to get some relief. But AU is currently counter trend bullish, as are a lot of XXX USD pairs that I'll be going over shortly. So how do we know where price is going? So this is just a key tip, I guess, some advice for you all who don't really understand smart money that well. How do we know where price can potentially be going? Well, it all stems down from where do we pull back originally. First, let's understand the higher time frame market structure. We have to know market structure first. So we know if we zoom out here, I know it's blurry, I'm just zoomed out. We had the lower low, we pulled back, we had a lower high. We made a lower low again, we pulled back, had a lower high. This is the low, or excuse me, this is the high that produced this lower low. Why is this not a lower low? Because we never closed below our prior lower low here. So this in here is still just the range in which it formed the lower low here. From this high to this low is the range. Okay, we closed below this low over here, right? But we eventually broke structure right in here. So now this becomes the lower low. All right, so now if we pull a fib from the high to the low, we can see that we want to get back up into premium price, at least back up into that 50%. We're going to come higher. I'd really want to see that 78.6 met around 716. So the reason why I have 716 is this is exactly where we broke original structure. Now let's take a look at the counter trend move here. Higher high, higher low, high, low, high, low, high, low, high, low, high, low. We failed to make a higher high here. Just based upon pure market structure with this counter trend, you would expect a natural higher high, right? But we made a lower low. So now this previous demand that we initially reacted from, because we can see higher high, higher low, higher high, higher low. We reacted from the swing point, pushed up. We failed to make that higher high. We rallied back to the downside. We made that lower low. So this flips to supply now. So 716 would be that open of supply. This is the last buying volume before the shift in structure was seen. Okay, we have a lot of imbalance in here. So that would be a good target as well. We can see that we ran liquidity from this previous high. All right, so the liquidity was run. We pushed down. We failed to make the higher high. We made the lower low. So now we're starting to pull back, okay? The counter trend with this expansionary move, this was the last swing point, right? We made that lower low, and then we made that higher high. We closed above the most recent swing point. So now we are officially counter trend bullish up until this point here. Okay, so now we can confirm longs, and now we know that we can continue to buy this pair until it reaches about 7,160, maybe 7,150 psych level. All right, so that's how you can tell where in price you're most likely to come. Just look at the previous structure. Okay, so in terms of the here and now, obviously we have to understand what news events are coming out. See, I don't really care about all this stuff in here, this advanced GDP. I don't care about what's going on Thursday, all this crap. It doesn't matter. What really matters is monetary policy and FOMC rate statements, unemployment rates, NFP, all that good stuff. The high impacting news. So today at 2 p.m. Eastern time, we're going to be seeing a lot of volatility. That's why we're just seeing a lot of choppy price action. We're not really moving. Hopefully after FOMC, when price starts to settle down, we'll start to see the wave play come back in. That's why the beginning of this week has not been very volatile at all, to say the least. We haven't really seen much movement, which is okay. We don't have to see movement every single second of every day. So, people in VIP would know the past few weeks have been absolutely awesome, but the start of this week has not been too great because of the low volatility. We haven't seen many setups at all. We haven't been able to be involved in the market, which is okay. Sometimes that's perfectly fine. We sit on our hands until the proper setup arises. Now, lower time frame. I have 3 potential areas of interest. Why do I have 3? Well, one, I have just for continuations with this lower time frame trend, if we get that. 2, if we get the overall break of structure and we have the overall pullback, right? We have a couple levels. This intermediate level of supply or demand, and then this overall level of demand down here in case we come a little bit lower. So potentially 3 areas in which we can react off of. Now, how do we know which one is the most highly probable? Not really. We just have to kind of take it how we see it. So this is why I tell everyone who's a part of VIP, if you guys are like, if I send this analysis out, you guys are looking to take this trade, how would you best approach trading this? Now, many people would say wait for confirmation. Yes, that's true. That's very good. But other people would just take the trade. What I personally would do if I have multiple levels of interest, or even if I just have one level of interest, what I would do is if all my rules are met for these levels of interest, these demand zones based upon market structure, shift in momentum, liquidity, and everything like that, I would simply place, if I'm risking 1% per trade, in this case, you'd probably have to split it up in 3 because this singular move would provide you wouldn't want 3 different trades here because if price just continued lower, well, then you'd bust through everything. So let's just say, you're risking 1%. I would enter off of a 0.5% risk here because let's just say that price trickles down and then trickles back up. There's no confirmation. Well, at least I'm still in the trade. Well, what if price comes into it, there's no confirmation and it busts through? Well, at least I only lose 0.5% instead of the full risk. But at least, if it goes like that, then I'm still in the market. Now I enter here, and if I can get some sort of confirmation or whatnot to take a trade, then I add the rest of my risk on board. Same thing goes with this. Place a buy limit, wait for confirmation. If none arises, I lose. Okay. Place a buy limit. If there's no confirmation, oh, well, at least we're in the trade. Maybe there is. I add my additional risk, whatever may have you, right? So that's how you can go about being involved in the market when your rules are met, so you're not missing out, but at the same time being conservative enough to where you're not putting on unnecessary risk because you'd like to confirm the trade, which is also nice. So let's first start off by talking about the first area of interest. Well, going back to the 1 hour time frame. This is an area of demand. Okay, we made a lower low here, lower high, a lower low, a lower high. We failed to make that lower low, and we made that higher high. So this supply flips to demand here. We haven't come into that yet. We also have on the lower time frame 15-minute imbalance. And you guys just have to flip through the time frames. There's no particular time frame in which to trade. You just have to keep flipping through. And I saw happened to be on the 15-minute that we can see a clear imbalance from this wick to this wick here. So we could come lower into 68955, something like that. But just going based upon my rules here, we swept liquidity. We had a massive run, sell to buy, made that higher high as expected. Just continuations with the trend. So as this liquidity was being run, this becomes the institutional selling volume that was influxed to take liquidity, to mitigate demand and continue. So that's why our areas of interest here and here are within this institutional move. Now, why did we stop here and react and go long? Well, we're in a bullish market for one, but two, we can see we had lower low, lower high, lower low, lower high. We failed to make that lower low there. We stopped. We made a higher high. So now this becomes the level of interest. And that's exactly why we reacted here. Okay. So yeah, we reacted here initially. We made that higher high, but we ended up coming down and sweeping it, providing us with that institutional liquidity run move. Now this provides a higher probability chance of mitigation and continuation. Now, if we end up busting through, which could be expected, we could see, FOMC come in and have a huge spike to the downside, then these two levels would be of interest to us, because this would be considered not a break of structure. It would just be considered an overall pullback in the market to continue long, because we know that we are now counter trend bullish up until this level, because we broke counter trend structure higher time frame right here. All right, so that's how you can distinguish the difference between, are you going to break and can pull back and continue short, or are you going to, potentially break and then continue long, right? Just an overall pullback. In this case, it is an overall pullback. So that's AUD USD. Those are my levels. I'm going to go over Chef JPY. Now, Swiss franc Japanese yen's a little bit tricky here, because we are in a bullish market, yet we're looking to sell counter trend. You can see that with the higher time frame. We're making higher highs and higher lows. High, low, high, low. We're expecting an overall higher high, right? But this is a little bit risky. We go down to the 1 hour time frame, we can see that we had clear equal highs that were run during London session. Well, excuse me, New York session. We were building up liquidity during Asian session and London session. 8 a.m. Eastern Standard Time. That's prime New York session. London, New York session changeover. We have a lot of manipulation around that time. Like I said before, if you guys have been paying attention to time and price, you would know between the hours of about 7 a.m. and 9 a.m. Eastern Standard Time is where you see that most of the manipulation occur for that London, New York session changeover. So we had a clear buy to sell candle breaking the counter trend structure. So this is the sponsored move. We also came up into an area of supply. Okay, so that's also another confluence. We are overall bullish though, so we have to keep that in the back of our mind. If we end up just busting right through, well, then structure would still dominate and we would just continue, right? But because we saw the manipulation occur at the right time of day, sweeping triple equal highs coming into supply, it wouldn't be a bad idea to assume a little bit of risk here to potentially take it short. Now we have a lot of liquidity right here as well. So this could be a potential, head and shoulders pattern, right? So I know I say head and shoulders and retail loses, which they do, but oftentimes how they lose is when they are entering below the neckline. So off the right shoulder here, we could see that break of the neckline. They're entering off of the closure, and then it moves right back to the upside and it sweeps their stop loss. So that's why I'm interested in it. So again, liquidity, but also 4 hour time frame, very sensitive area of price. Support, 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 turn resistance, 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 resistance. Now we want to turn that back support and continue with the overall trend. So you push down into here would be nice, maybe around 140.5, 140.3, and then continue long. So that is my analysis on Swiss franc Japanese yen. Euro JPY. I have a few areas of interest here. First and foremost, market structure, higher time frame. Well, let's go to the daily. We're very bullish. Higher high, higher low, higher high. We're at this current moment in time making this pullback, creating this higher low here. So we could potentially push lower into my overall level. This is my demand level that we have not come into yet. So I want to see one more drive into the low here to take out sell side liquidity before then rising again. So overall pullback, we're still in this selling phase. Once we reach about 136.9, 136.8, that's when I will definitely be looking for buys in and around this level here for a higher time frame push to the upside. And we know that because, well, one, we're bullish, but two, we also have a lot of equal highs that's drawn liquidity. This is not a high in the market. If we're going to go short overall, we ought to really take out this liquidity prior to going short. So we can see here, this is my zone of interest. We have not come into it. This low here and this low here are relatively equal. So we want to be running the sell side liquidity. Sell side liquidity here, here. So any pullback to continue lower is expected. So where's counter trend structure now? Well, lower low, lower high, lower low, lower high, lower low, pullback, deep pullback, lower high, and now we're looking for that lower low again. And we can see that we are now bearish again because we cleared previous market structure. The counter trend was right in here. We cleared it. We didn't pull back enough. That's why we have imbalance, and I'll go over that in a second. But that's why we're counter trend bearish now. We're looking for shorts down into our objective for potential longs. It doesn't mean we should just automatically buy it here. And you can, because this is just previous market structure where we swept liquidity higher high. You'd naturally expect a higher low and a higher high, but you probably have what, 180 pip stop? Probably not that smart. So going to the 1 hour time frame, we can see that we pushed up. This was actually our overall level. We just refined it before. So VIP, I believe we had our level from here. So anywhere in here was that level. And we did come up into it, and we did not hit our stop loss. So if you're in this, congrats. Keep holding into 136.50. So we can see that just many levels of supply are being met here. You know, we had this push up into this level of supply. We have the imbalance move between this wick and really the down here. We finally filled that, coming deeper into this mini supply and the imbalance fill. We ran the high one more time. Buy to sell, broke the counter trend market structure. Now we're looking to head short. So now it's just kind of been in this trickle-like formation here. We haven't really been seeing deep pullbacks. So I have two levels of interest just based upon pure market structure. We have a level of supply here we could run into and just continue with the overall structure here. That's a possibility. Now, if we have an overall pullback, remember, this is not going to be a break of structure, in my opinion. If we close above this level, this would not be a break of structure because we're overall bearish and we need to come into the objective, just like I was talking about on AUD USD. So in this case, it would just be an overall pullback for a continuation and not a break of structure pullback long. That's how I would view this analysis here on EJ, in my opinion. Now, could it break pullback long? Sure. Well, then in that case, we would be looking for longs because then it would be high, low, high. We look for a pullback for continuation. So we just adapt to what we see, but we have to put ourselves in the highest probable chance to succeed here. So this is one area of interest. If we break, I highly expect price to come back up to where we initially broke, right? Where the demand turns supply. So we can see higher high, higher low, higher high, higher low, higher high, lower low. The demand is invalidated because we never made a higher high again. We broke and made a lower low. So we want to pull back up into that prior demand, now turn supply, maybe back up into 141. That would be a nice psychological level for this pair, maybe 140.5, probably a little bit higher than that. But we can see that we have imbalance between this wick and this wick here. It was just straight selling volume. The buys were not offered within this region of price. So we have to probably go make the market efficient again and then continue lower. So if we do get pullbacks, I'm interested in really 139.5 and then, you know, probably around just anywhere in this region of price to fill the imbalance. And then ultimate targets would be probably 136.5 or at minimum 136.8. So that's my analysis on EJ. Continuing, GBP CAD. So GBP CAD is interesting. It's not ready to go yet. Higher time frame. Yes, we are very much bearish. But what do? We did come into, we swept a lot of liquidity and we came into a very interesting level. Okay. So if we just zoom out on the weekly time frame, we will see that we made the low, we pulled back, made a high. We could easily make a lower low, but we could definitely see some relief on this, have a deep, maybe a overall pullback for the next couple of months, maybe a year or so, if we get a pullback, because we swept a lot of liquidity and we came into this higher time frame demand level. Doesn't mean that we're going to go long. It just means that this is a prior area of price that we could see some sensitivity to where we could pull back. So we're coming into that now. And if we see right in here in the lower time frame, This low, or really all of these lows, this low here, this low, was run just by a few pips with these wicks. So this was the liquidity run. That's why we pushed up and we failed to make that lower low, and then we broke structure, made that lower, that higher high. That's why we just continued. So I'm going to use bar replay here. I'm going to show you what I'm looking at. 4-hour time frame. This is our last selling volume before the big buy up, right? And on the daily time frame, that's where we had that imbalance. This is the imbalance fill. So let's call it 1.5376, something like that. All right, now that's exactly where we came into here. And now we're starting to slow down in price. Could we see a potential reversal back to the upside? Definitely, at least back up into prior market structure. Lower low, lower high, lower low, lower high, lower low, lower high for a potential lower low. If not, a higher high, right? So if we find a buy, these would be our first targets. You can definitely leave runners in case it goes long, but that would be your target because these levels of supply are where we broke structure, right? So we can see we had the overall pullback. We had a few entries here in VIP, and then we made a low. We failed to make a higher high, and then we made that lower low. So these two levels of unmitigated supply are where we would likely pull back up into if we, have the pullback. So right now, we're still trickling down, but we're slowing down in price. The momentum is potentially starting to shift to the upside. Low, high, low, high, low. This wick took out this low here, coming deeper into that level that we just went over. We didn't make a higher high yet. We have not broken the counter trend. So I'm still sitting on my hands on this. But we have this doji candle, this swept liquidity here and here. Then we had the massive bullish run. Potentially, we could come down, see reactions from this level, and then go long. You could take an entry there, 1.54 round figure, or you can wait for the counter trend break of structure, and then we can look to take it off of that third drive into the high. 1, potentially 2, and then you'd like to take it right there for that third. Right now, it's just up in the air. I'm sitting on my hands. There's really nothing too pertinent at the moment. I'm kind of just waiting for further price action to confirm. We go to our indicators. It's the only indicator I use besides the EMA. Volume flow indicator. We can see that we are volume is starting to slowly increase, but price is still falling. So this could be a potential higher time frame divergence for a potential shift in structure. So we'll just have to wait on this. We could easily make a lower low, could come down, make a lower low again, as long as we stay probably above the bottom of this box here, because that's the low that we had way over to the left. We could come deeper into this blue box. But if we can see price action start to shift, maybe get some higher time frame accumulation, which we potentially are seeing, there could be a buy set up here in the future for us. But as of now, I don't really see much. GBP JPY, this is very interesting. I don't like GJ at all right now. I know someone said they wanted me to go over it, but I don't like trading this. What is this? We're not waving. We're not making higher highs or lower lows. So it's very, very difficult to trade. It doesn't meet any of my rules. I'm not trading GJ right now. But if you guys are very keen on it, I probably will suspect higher prices on GJ just because the pound is quite strong at the moment. We can see that we made a high, we made a low, we made a higher high, we made a higher low, and we made a high here. We reacted off of this demand and made a high here. So we could come back down lower time frame. And then we can see if I get rid of this, we have imbalance right in here. So that could be an area where we pull back down into to take further upside. However, could we go short? I mean, we're not making higher highs or lower lows. So could we react off of this prior supply level in which we broke structure? High, low, high, low, high, low, high, low, failed to make the higher high, like I said before on a couple other pairs. Then we made the lower low. So this is prior demand now turns supply. So we have reached that level. Could we just break to the downside? Potentially. But where would we come into? We wouldn't really come into anything because what could happen? Could we just stop here and then go long again? Maybe. We're not making higher highs, lower lows. We're just kind of flagging at the moment. So I don't like GJ at all. UJ. If you guys recall, weekly time frame, remember when we were buying in here, we had about 5 entries in here for buys. For those of you in VIP, you would know this. The reason why we targeted 138.3 or 139, 140, whatever you targeted, and we had the reaction very strongly as a result of the imbalance on the higher time frame, right? This was where we broke structure. We're bullish, right? Then we broke structure back to the downside. We were making lower lows. So this is the imbalance in which we were pushing up into on that higher time frame. If I just zoom out, we're pushing up into that region. We can easily bust through and make a higher high. But since we haven't come into that imbalance region prior, when we were trading, in here, that would be the target to look for potential shorts. If price is going to short, it's going to short from this level. And right in here, when we were trading with it, the objective was not met. So we could continue to buy. Even if it busted through, great. It would make a higher high. The buys would be valid. But if it's going to short, it really ought to short from this level. So the buys from in here, where we originally bought it like 5 times, was still very valid. Now, this doesn't mean to just place a sell limit here and just sell off. Well, it could easily just bust through and continue to go up. I mean, we're still very, very bullish on UJ. But that just means that this is the objective in which you would like to slowly start getting out of your buys if you are in them, just in case the rollover. So now we are seeing a potential rollover to where, we could see, an overall pullback, maybe even a lower low down here. The higher time frame objective has been met. 1 hour time frame, we can see we had the reaction low, failed to make that higher high, and then the lower low was seen. So the shift in structure is there. I am favoring shorts. Liquidity was run, buy to sell. We never pulled back up to test this supply. We created another supply level after the lower low was formed. And now we can see that we are trickling back up. This is more of a pullback phase. This is more of the expansion. Momentum, law of effort is to the downside. So we could see, continuations up, maybe a reaction from, deeper into this supply here, lower time frame supply, something like that, and maybe that rollover. Or we come deeper into our higher time frame level up into here. So 2 levels of interest. I'm in a little bit of profit right now, but I know that we could still continue to push up higher before falling. We have equal lows. That will be the draw on liquidity. Overall, looking for shorts from these 2 levels. Let's see. AUD CAD. Man, oh man, oh man. Of course, look what it did. Go figure. All right. I'm not going to go breaking this down higher time frame. I do like this potential level for shorts 8939, 8938, because yesterday we had that imbalance fill and we had the break of structure counter trend. We formed equal lows. This was when we had news yesterday. So this will be the draw on liquidity. Let's see if we have any divergence. Be a potential influence. And yes, we do. So we can see price has continued to climb, but then volume has been diminishing. Okay, volume has been diminishing. So this could be a potential reversal formation. We can see that we failed to make a higher high here. This is supply that, once was demand in here. Flip to supply, we made that lower low. So I'm looking just at pullbacks up into this region for shorts. So we'll see. I mean, it's quite tough right now because technically, I don't know why I have these yellow lines here, whatever. Technically, we are counter trend bullish right now. So we have to be careful. This would be a counter trend trade, just more for a sell into a deeper pullback. But we are quite bullish at the moment. So we have to just be careful of that. Same goes for AUD Swiss franc. I don't trade AUD Swiss franc really at all, but I saw a setup on it that looked interesting. Higher, yes, we are. But currently, at this current moment, we are bullish. Okay, we're making higher highs, higher lows. So we could easily make a higher high. We could easily come up and fill some imbalance here. So we just have to be careful of that if we're looking to sell. So I was really hoping, to get a short from this level, 6703, 67025. The reason why is because if I go to the 15-minute, we can see that we started to distribute in price. Distribution, we came down, filled imbalance. This was demand. We failed to make the higher high again, and we rolled over, breaking the counter trend structure. This now flips to supply. I was hoping we would get that pullback. We never did here. We never did here. And finally, we pushed down and we reached that higher time frame level of demand. So just continuing with structure, you would expect higher high, higher low, higher high, higher low into this demand here in which we actually came into. So as of right now, this would be a risky sell, but it still could have happened. But if it busts through, we would have to just be like, yeah, we expected that. But the reason why I like it is because technically we're counter trend bearish here. This is a valid region of supply. We distributed, we took liquidity over to the left, and we pushed up into this higher time frame level of supply here. So this could be a sensitive region in which we maybe have an overall pullback. I don't really know, but we can see that doji candle formation there for potential pullbacks to short. So I'm going to keep an eye on that. All right, so that's all I had. I know you guys had a few pairs you wanted me to go over. USD CAD. USD CAD, I don't really see much on it at all. I'm just going to wait for FOMC to die down. Overall, we are bullish, and we haven't reached that higher time frame level of interest. Really, two levels of interest: 1.3850 higher time frame supply, and then this other region of supply here that has imbalance at 1.35, pretty much to the T. So I do believe USD CAD will go long. Overall, we are in this counter trend pullback phase. We are counter trend bullish. We're making higher highs and higher lows. So overall, we're expecting further upside, at least into 1.35. And we know we haven't hit that yet, so continuation as long as expected. Now, we could continue to short off into our areas of demand, filling up all of this imbalance that is still valid here. So, I am personally still in from 1.25 back when we were in here, just sort of holding. This is more of a swing trade for me. And then we did call this region out in here as well. So higher high, higher low, higher high, looking for an overall pullback, higher low. I really want further discounted price before we continue long. There really isn't anything to say we're going short or long here because we created equal lows and then we took those equal lows with that wick. So are we going to go long? Are we going to continue short? I don't know what's going to happen. We're kind of stuck right now. There's really nothing to say either way. So at this current moment, I'm going to be sitting on my hands waiting for either one of two things to occur. Waiting for more liquidity to be run, and then a break of counter trend to the upside to confirm longs. I can wait for that pullback to long it, or waiting for some sort of trickle-like state, lower low, lower high, and then some sort of run on liquidity, and then fall, break counter trend, pull back and short, something like that. Maybe back up into supply, something like that. I don't know. I just have to wait for further price action. So don't try to force anything. There's no point. Wait for the setup to arise. Right now, there's no setup, so we just sit on our hands. I think I saw someone say Euro CAD earlier. Euro CAD, again, is sort of just kind of out there. There's really not much to talk about. We are very bearish, so further shorts are expected. That's why I'm looking for continuation short on UCAD, at least back down into these higher time frame regions. So XXX CAD shorts probably would be expected. Higher time frame, we're bearish. Lower time frame, well, we can see that we pushed up into this region of supply here very nicely. I'm sure that this wick probably came into something within this buy to sell. So now this becomes the range. This is the high that made this new low. So if we do get a pullback, we could be looking to pull back either into this region of price here, the supply, or just deeper into the supply here. But we can also see that this low, we mitigated with that high. So that's why I like this region as well, because this could have already been the mitigation of this supply level. Now we just need the mitigation of this supply level here. So it's really just kind of interesting at the moment. Nothing is like standing out, screaming sell, 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 or buy, buy, buy. But if we do get a pullback, I guess I would like to see, sort of this region of price maybe come up deeper into this region. But overall, this is the swing point. So this is the range in here. So if we get a pullback, that's where you want to be looking to sell. But at this current moment, I don't really see anything pretty. Really what I like to see, guys, is if I know my direction is clear, which will probably run this low here, taking sell side liquidity. If we get a pullback, let's just say this is an area of interest for me. If we get the reaction, so maybe some liquidity forms, buy to sell, coming into that region of price, counter trend structure is broken, liquidity is run, right time of day, pull back into that sponsored move, that's my setup. So there's no need to force anything until you find something that's absolutely beautiful, right? Because let's just say this was an actual entry, right? Maybe a 32 pip stop loss. Who knows? We could be targeting this low here. I don't know. That's a 1 to 3.6, maybe even lower, 1 to 1.2950, something like that, to 1 to 4. Still a good risk to reward. Even if you had one trade per week, heck, even one trade per month, doing 4% a month is not bad. Many people think it's bad. It's really not. If you guys watch my psychology video, you would know 4% per month. What is that? 48% a year, almost 50% a year. Hedge funds don't even do 20% a year consistently. So understand what's realistic and what's unrealistic in your trading. You'll probably shift more from blowing accounts to more consistency. So that's why, I just wait for my rules to be met. I don't force anything. If I don't see anything, I just move on. In this case, I don't really see much. Same thing with GJ. I don't really see much there. Across the board, I don't really see much at all. But, we have a few setups incoming. We could potentially be looking to trade, after FOMC, most likely. So, yeah, guys, if you have any other pairs, any questions for me, I'm going to stop sharing screen here, answer any questions. Let's see. Yeah, went over EJ, GU. I'm not going to do, I don't do gold. I don't like gold. I'm not going to do any indices. Any questions specifically about smart money? CAD JPY, I can do that. Euro GBP. Yep, I can do that in a minute. I'll stay on for like another minute or two to see some questions, and I'll get back into the charts and we can go over a few more. GU, G-Chef, okay. CAD J, awesome. All right, I'm going to go do some more here. All right, what was it? CAD J, someone said maybe. CAD JPY, again, we're kind of just stuck. I don't really see much at the moment. We're very bullish. Could we have a further push to the downside for more of a pullback? Yes, we could. This is the range from this high to this low. This is the low that produced this higher high. So technically, we can still trade lower into this range, maybe mitigate some imbalance. I don't know. But at the moment, there's no setup. The higher time frame direction is bullish. 1 hour time frame, I have this region of price. We can see higher high, higher low, higher high, higher low, higher high, higher low. Reaction off demand failed to make that higher high. We broke, made the lower low. So technically, yes, we could pull back into this supply level and then fall for another swing to the downside before potentially moving up. We have an imbalanced region right in here. It's imbalanced. So we could push up. I guess what I would like to see maybe is this run on liquidity, buy to sell, strong reaction, and maybe pull back to short, something like that. But again, there's no pertinent setup at the moment. So no need to force anything. I would just wait for something like this to occur. And until we see something like that, I'm personally not involved at all. So yeah, let's see. Euro GBP. Euro GBP ended up just completely dying. It's tricky right now because we did sweep a lot of liquidity. You can see even these highs in here were swept by that wick. We swept a lot of liquidity. Could we continue short? Yes. Again, it's just kind of choppy. We are accumulating in price a little bit. One drive, two drive, seeing that third drive now. I do potentially like 8,390. That was my secondary area of interest just because I can see in here back from May of this year, This low came into prior market structure. In here was Asian session. We enticed the buyers, took their stop losses, enticed the sellers, then took their stop losses again. Broke counter trend structure. We pulled back, mitigated. There's lower time frame accumulation in here with this quadruple doji candle. There's accumulation into this region. We expanded, we pulled back, tested, continued. These two equal lows here with these two candles, we swept it. 4 in the morning, London session open, sell to buy. Now we're looking at taking out this low here. Okay, so 8390 cycle level round figure. We could come into this level and see reactions. I'm not going to be buying from that level, but we could see reactions from it. I'm not going to be straight up setting a buy limit there. I would like to see some lower time frame, I don't know, just accumulation, maybe a liquidity run, sell into this level, buy, firm break of structure, and then that would be that proper entry for me. But until that, I don't see much on it. There's no sell setup at the moment. There's really no buy setup at the moment. Let's see, GBP USD was one. There was many opportunities last week on GU, guys. If you guys missed out, very, very sorry for you. There's probably like 4 opportunities. Currently, just like AUD USD, Euro USD, we're looking at further upside, further dollar weakness a little bit. We're having that higher time frame pullback before maybe a potential expansionary move back to the downside. GBP USD, well, let's see, lower low, lower high, lower low, lower high, lower low. So we currently are pulling back now. We broke the counter trend structure. We closed above this high. So now we're starting to push higher. We have an area, a mini level of supply here with imbalance, and that lines up with 1.2100. So I do want 1.2100 before we go short at all. That doesn't mean I'm selling it here. That just means that price really ought to come higher before it potentially comes lower. But this isn't really a clear, valid region of price. I want to see a deeper retracement back up into this imbalance. This is where we initially distributed in price. We had the pullback, distribution, and then we broke. So this is really where the pullback failed. We didn't make any more higher highs, and we ended up pushing, making a lower low. So the imbalance in here is really where I'd like to see that pullback finish before potentially falling. But long story short, we're still bullish until either of these two levels are met. 1 hour time frame. Well, I'm going to go to the 15-minute. Well, break of structure, right? Now we're bullish. Cool. 15-minute time frame. Equal lows, relatively equal lows, descending liquidity. Sell to buy, counter trend, low, high, low, high, low, high, low, high, low, higher high. Broke counter trend structure, sweeping liquidity. 9 in the morning Eastern Standard, prime New York session open, manipulation. Push into demand. I mean, you have all the confluence right there. Where do you enter? Lower low, lower high, failed to make that lower low, higher high. That's where we initially broke the structure. So this becomes the demand. Perfect entry, boom, right to the upside. See, if we're patient like this, if we're waiting for stuff like this to form, it's not that difficult. It's just many people don't have the patience or don't know what to look for, which is why a lot of people fail. And we also had, again, more liquidity here. Shoulder, head, shoulder, push down, retail sells below the neckline. Nope, right back up. We bought it here. Retail loses again. So that was one level. Then what do we have? Counter trend here. Low, high, failed to make that lower low, higher high. As expected, we're coming into this level. Pulling back, this becomes the demand now. We trickle a little bit lower into it, but then we ultimately expand. Another trade could have taken. Well, again, what happens? This is what we called out in VIP yesterday. I actually had my entry here because I didn't think it would come any lower than this. It ended up pushing, having a deeper pullback, but nonetheless, is almost about to hit my take profit at 1.21. So in profit right now. So again, lower low, lower high, lower low, lower high, failed to make that lower low, higher high. So now we haven't reached our objective yet. So if a pullback does occur before the objective is met, we can still be looking to buy. We have confidence in that. Now, the reason why I didn't buy in here was because this wick already kind of mitigated this demand zone here, which mitigated this demand zone here. So that's why I had this last point of demand that formed the imbalance. That's why I had that. It was also, it was a good enough pullback for me. 61, 71% retracement. Didn't want to be too greedy with it. Didn't get the best entry in the world, but our risk reward was still there. Sweeping liquidity again. Sell to buy. Stops below the low here or here. We can see it did not hit that stop loss. That's why the stop loss precision needs to be there. You have to understand where to place your stop so that you don't get hit out. So now this was our level of original entry. We haven't hit this objective yet. If we pull back, could we see a spike? Yeah, I believe we probably can see a spike somewhere in here. That's my idea, right? We have equal lows here. So the news, we could easily see something like this. Boom, boom. Have that quick liquidity run from yesterday during end of New York session, Asian session, have that New York session run and then continue long, hit that overall objective. I do think with FOMC, we probably will see 1.21 today. So probably push down deeper into this region for continuations. All right. So that is GU. Let's see, did I go over everything else? I think so. I think I touched base on everything you guys wanted me to. EuroCAD. I already went over EuroCAD. There really wasn't much to know about EuroCAD. It's just kind of sitting. There's no pertinent setup at the moment. No, a lot of people think I follow ICT. I have a lot of respect for Michael Huddleston. I know him quite well. I have my own strategy, though. I did not learn from him. Let's see. All right. Oh, good. We have a lot of questions. Okay, cool. So, guys, that's all I have in terms of analysis. I'm going to answer some questions, maybe provide some examples for these questions. If you guys don't have anything for me, have a great rest of your day. Thank you for hopping on. If you enjoy this type of analysis and kind of resonate with it, and if you're interested in learning more, feel free to hop over to our website, www.arielfxtrading.com. Just book a free call with us. We'd love to speak with you regarding your goals to see how we can best help you. If we're able to help you, sometimes the fit isn't there. Just to make sure that you're the right fit for us, but also we're the right fit for you. And if that seems to be that relationship is there, we would love to work with you further to help develop you into that funded trader that we have that goal for all of our clients. So thank you guys so much. Let's see what we have going on here. How to deal with consistently big losses and small wins. Well, you first have to understand first of all, where you're getting into the market and then where your stop loss and take profit is, right? If you can identify an area. So let me just go back into an example here. Share my screen again. Right in here, we took a trade, long position. Remember from that level we talked about, stops below that low. So let's just call it 30 pips just to make it pretty. Take profits 1.21. We'll just make that pretty. There we go. That's a 1 to 5.26. So it doesn't matter what you risk. It's going to be a multiple, at least 5 times your risk. So whether that be 1% risk, a 0.5% risk, a 1/4% risk. Guys, if you're risking more than 1% per trade, probably shouldn't be trading. Just telling you, that's not professional. It's really unsustainable. Don't over leverage. It's not worth it, I promise. I'd never risk more than 1%. I haven't risked more than 1% since I started trading 4 years ago. 5.26% risk to reward. That's a good. You have to first identify what risk to reward you want to achieve first. If it's at least a 1 to 3, great, it meets the rule. At least a 1 to 5, great, it meets the rule. At least a 1 to 7, well, then you have to reevaluate your entry. So in this case, how to deal with big losses? Well, you should never have big losses unless you're over leveraging, unless you're not using, proper risk management. It should be the same every time. Go to position size calculator. It's by my FX book. It will go over exactly how you can. In here. This is how you follow risk management to a T every time. Let's say we're trading Euro USD. I have USD account, right? Let's say my account size is, say $10,000, right? Ratio, 1% risk, stop loss. Let's just make it up, 23 pips. On this account size, trading this pair with this currency, risking 1% with a 23 pip stop, I calculate it, I use 0.43 lots. That's my risk. So if I lose 1% every time. If my stop loss is bigger, like 30 pips, then the lot size would drop. But still, if I lose, I only lose 1%. It keeps my risk the exact same every single time. And you should always understand where you should be taking profit. Your entries and exits and take profits are just as important. They're equally weighted. So understanding where to place your stop losses, where to place your take profits, very, very important. You can take partials, at maybe a 1-to-1, or maybe when we break structure, right? So where's the counter trend? If we enter here, the counter trend is here, right? So if we break it and close above it, then we're most likely not going to come back below this low now. So now we can take some partials, and if we get a pullback, great. Whatever we just hold, we may potentially place a new entry, which we did here, and then continue to go. Have multiple targets. I always say target areas in which price could potentially reverse from. I have no way of knowing where price is actually going to reverse from. Is it going to reverse from here? Is it going to reverse from here? Are we just going to keep blitzing through? Are we going to come up higher into higher time frame supply? Or are we going to just come up a little bit, sweep this high here, and then fall? You have to just be, use a little common sense and be like, okay, well, where could we potentially reverse? Well, maybe if we sweep this liquidity high here, or maybe this high here, like we did with this wick, taking partials above this high, moving stop to break even would be valid. If we continue, great. We have more positions running for us. That's a potential area of interest where we could potentially short from. So that would be the second take profit. If you think it can go higher, leave a runner, and then maybe have your final take profit up into here where it could potentially reverse, because that would be the higher time frame structure and distribution. So, this is all something that we will teach you if you are a part of VIP or plan to. So yeah, you just have to understand where your stop loss take profit is and set multiple take profits. Let's see what else we have going on here. How to identify liquidity. Wow. I would recommend watching our Smart Money Concepts videos on YouTube. Really what you want to look for is just support resistance levels, right? And looking for price to go sweep those, let's say there's equal highs, just like we saw in Chef JPY. We had equal highs, triple equal highs, price ran those equal highs and then immediately railroaded right back to the downside. When you see a level that is highly sensitive, if price is oftentimes stopping at a resistance point, pushing back down, coming back up to that same point, pushing back down, pushing back up to that same point, there's a lot of stop losses above that high. Many retail traders are trading that resistance and looking to short. Well, we wait for that liquidity to be run, wait for that opposite directional move, and then pull back to mitigate. I would highly recommend that our YouTube videos. They're free. Smart Money Concepts videos. It teaches you how to identify liquidity. The imbalances, which one should target for day trading? A lot of this is all subjective. There's really no objective answer. I would say, I first of all identify your range, right? So identify your range here. We go to any pair, Euro US or Euro JPY. Day trading, it just depends on where your area of interest is. So for instance, here I have multiple levels. There's imbalance everywhere. There's imbalance between here and here. There's imbalance between here and here. If you're looking to sell, you probably want to be selling within the imbalance or supply levels in here. Higher time frame imbalances always trump lower time frame imbalances, right? So yeah, that's probably all I can really give you. It's sort of hard. It's sort of subjective. It's like where are you targeting? What direction you're going? If you're bearish, you're looking to go short, look for imbalances to the upside, right? Now there could be tons of imbalances like right in here. Imbalance between here and here this wick. There's imbalance between here and here. There's imbalance between, the higher time frame 4-hour candle here and here. So there's multiple levels. You could be looking to sell anywhere in here, anywhere in here, or anywhere in here. It's just like where are we most likely to go? These would be valid regions of price to sell, in my opinion. Any pullback to continue shorting is valid. So I personally like the higher time frame, but I mean, you could easily look at filling in balance, looking for some sort of confirmation, and then, you know, shorting like that. It's all dependent upon the current setup at the current moment, but always higher time frame and balance trumps lower. When it comes to POI, you play it for Wyckoff schematic. I just look. I play. Sometimes I place half risk position as a buy or sell limit, and then wait for confirmation. Could be in the form of a schematic. Could just be like a liquidity run and then break of structure. Just some sort of shift in direction from my area of interest. So if it comes up into my area of interest, break structure back to the downside, momentum is shifted, then that will be confirmed for me. I can look for pullbacks to continue to short. Can you explain a confirmation that is not? I'm not sure what that word is. CHOCH. German 30. I don't trade that. Sorry. When do you use VFI? Not something I see used very often in countering pullbacks. Also, why that divergence indicator? Divergence is it's important. I look for it when price is coming up into a higher time frame level of interest. If price is starting to slow down prior to a level of interest, let's say we're pushing up, right? And we're in a bearish market. We have an area of supply, price is pushing up, and we're starting to slow down in price. Price is just making discrete higher highs, higher lows, and then price breaks to the downside and it closes below market structure. Well, then I would use VFI. It's just something I've always used. It's really, really good volume price divergence indicator. And I see if, these discrete higher highs, higher lows is price, price is obviously pushing up, but is volume diminishing? If volume is continuing to push up, there's no divergence. That doesn't mean that price won't continue to short off. But if there is divergence, meaning if price is pushing up ever so slightly, and then you see that huge push to the downside, that break of structure to confirm, then you can go to the VFI to see, was volume actually diminishing when price was still pushing up? That indicates offloading of positions by the institutions. And then you can see that, distribution, continuation to the downside. It's just an added confluence. It's not necessary, but it does help. Let's see. How to understand liquidity run versus actual market shift. That just comes down to higher time frame market structure, in a sense. Usually when market is going to shift structure, you want to see a firm closure above the previous swing point, not just a wick above it, because oftentimes, like what I showed you before here, I'll show you really quickly, guys. I think it's what, AUD, USD? No. Oh man, where was it? JPY. I know I had it here somewhere. UJ, GJ. Where in the world? NZD, USD, UCAD. Anyways, I'll just give you an example. If you're overall bearish, right? Let's just say you go like this and price is going like that. Well, you would need a firm closure and sustained closure above it. You wouldn't want to see a closure and then a push right back into the range, right? You'd want to see price close, and maintain its bullish structure, maintain the highs. That tells us that, okay, we're probably going to shift now. So when a pullback does come, we can look for longs. But if price if it closes and then immediately pushes right back to the downside, back into the range here, then it's probably just a liquidity run for a buy to sell. Or if it just wicks it and then closes back in the range, it's just continuation. So obviously you want to, if it's bearish, you want to continue to look for shorts, but don't get fooled when price comes back up, takes the high, even if it closes above it. You want to see that sustained closure, that sustained push, because it could just easily close and then engulf back to the downside, creating that sponsored candle that you can potentially play off of a pullback. I'm trying to find that example here. I know I have it somewhere. I'm not sure where it is, though. I know I talked about it. I don't remember, but that's really what you want to be looking for, you know, in a more broad level. Obviously, if you want more in-depth explanations, you know, definitely check out the YouTube, but you know, our courses divulge deep into that. Let's see. NASDAQ, I don't trade that. Gold, don't trade that. GJ, I already talked about it. Gold, don't trade it. Guys, remember, if you guys, you know, join my live sessions Wednesday mornings or Sunday afternoons, I only go over Forex. I don't trade anything else. Smart money is very hard to distinguish with stuff like commodities and indices. Not to say that it's not prevalent. It's definitely prevalent. Every market moves based upon liquidity and volume, but I prefer Forex just because you easily see it. Let's see. Oh yeah, guys. Sorry, I have so many questions here. I'll type in my my website, so for you guys interested, you guys can have it. There we go. Show us your MetaTrader platform. Okay, I'll post something on my IG story today. You guys always ask for that. Do analysis. Why you guys need my MetaTrader? They're fine. You know, if you guys want it, I'll give it to you. When is the best time to trade the market? Look for entry. London session, New York session, really between the hours of 2 to 4 a.m. Eastern Standard Time is really where you see that London session manipulation. Between the hours about 7 to 9 a.m. Eastern Standard Time, you see that London, New York session changeover. A lot of manipulation occurs around that time. Pretty much in a broad level, 3 a.m. Eastern to 11 a.m. Eastern Time is really where you see most of your real true moves in the market. Asian session is just choppy. Doesn't mean that you can't trade Asian session. You can trade NZD pairs, AUD pairs, yen pairs during Asian session. But I just prefer London and New York. You have an entry strategy that you use to enter into a trade. Yeah, I mean, I have it just based upon my smart money confluences and just confirmations. What's your YouTube channel name, please? If you just look up Ariel Fx on YouTube, it should pop right up. How do you identify the daily bias? It just comes down to top-down analysis, really. And that's something that's really important. I guess I can share my screen really quick again. I don't have too much time, guys, so I'm only going to stand for a little bit longer. But for something like, I'm not going to go over, well, Euro USD is very interesting. It's very, we're bearish, but yet we're dollar's weak. We're kind of bullish. It's not something I want to mess with right now. But in terms of daily time frame, how do I determine my bias? Well, it's interesting because you can't really determine like, okay, what's my bias for today? It's very sometimes hard to determine that. You know where your bias is overall. Like in this case, higher time frame, we're bearish. But we came into that level as discussed before, and we're pushing away from it, and we broke the counter trend structure here. So my bias is now long until it hits the 716 level. So, I mean, could it just easily go long for the day? Sure. Could it go short for the day? Sure. I don't know like what's actually going to happen today. I just have my areas of interest, and I have my higher time frame POIs. I have my overall bias, which is long here, but I don't know what's going to happen for the exact day. That's just dependent upon what price shows me. You know, if we end up sweeping liquidity, coming into demand, maybe hitting this imbalance on a lower time frame, breaking structure, then yeah, my bias for that particular day would be long, for pullbacks to long. But if we just continue to trickle down, my bias is overall still long, but we could easily just trickle down for the remainder of the day, and then maybe tomorrow we come into a level and then go long. I'm not sure yet. So I just have my areas of interest, and I just wait for those areas. So I know my bias, but in terms of for the day, that's kind of up in the air. What's my IG? It's Ariel __ FX. It's double underscore. Let's see. Good questions, guys. I like the questions here. Sometimes it's hard for me to explain it in clear depth. I like to show through examples. So our YouTube channel provides a lot of examples. I know they are hindsight. Well, most of them were actual trades that we took, but they are hindsight trades because it it teaches you what to look for and stuff like that. Yeah, Euro USD, I could do a breakdown later. I just don't see anything. I'm going to wait for FOMC before I really determine a bias on any other pairs, because that will produce probably the volatility for the next few weeks. Let's see. Fair value gap. That's not really my term, but imbalance, I guess you could say. Yeah, I can do that really fast. Just like we had on Euro JPY, we had the imbalance here and here. We have imbalance between this wick and this wick here, right here. There's just straight selling volume. There's buying volume in here. There's buying volume in here, but there's just straight selling volume. There's no buys were not offered within this region of price. Same thing here. Buys were not offered between that wick and the current price action right here. It's just straight selling. Same thing goes with here. Higher time frame. There's a 4-hour, right? Wick here and wick here. Only sells were offered. And we know that in momentum, usually wicks are filled and imbalances are filled. We got to make the market efficient to continue to trade. So we offer buys in this region of price before continuing. We offer buys within this region of price before continuing. Same thing here. So those would be my areas of interest based upon, my predetermined bias, my overall objective. My bias is short, just looking for pullback to potentially get in the market. But that's, I guess you could say, the definition of an imbalance or fair value gap, for those of you who use that term. Which time frame do you use to identify your P? I use every time frame there is. It's all, again, it's all subjective. It could be on the 4-hour, could be on the 3-hour, 2-hour, 1 hour, 45-minute. It's just dependent upon, what the market is doing. So in that case, for Euro JPY, there was a 1-hour level of supply, but there's also a 4-hour level of imbalance. You have to flip through the time frames and just see what looks the best. What about one's leverage? Some platforms just have 1-to-1, not even 1-to-2. I personally use just a 1-to-50. That's really all I need. I guess I'm not quite sure what your leverage is. I mean, there are brokerages that offer 1-to-10s, 50s, 100, 500. You have a profit percentage of your account you aim for each month. Yeah, I believe, for Forex trading, it all depends on your strategy. So for my strategy, I'm able to get high risk reward trades just because, I know where to enter, because I know what clues the institutions leave behind for me to enter. I usually aim for at least a 1-to-3, preferably a 1-to-5. But I'm taking partials all throughout. So I'm not really achieving that exact 1-to-5, like 5% risk or reward if I'm risking 1%. I would say anywhere between, if you're a beginner, don't really aim for more than like 5% a month. Just get used to risk management. If you're more seasoned and you have, high win rate, you have a good risk to reward for each trade, you're very patient, anywhere between like 3 to 7 to 10% a month is probably good. That's if you have high risk to rewards. You really don't need any more than that. Do I trade US 30? I do not. I don't trade commodities. I don't trade indices. I only trade Forex. Forex, to me, that's how I learned. And I'm very picky. I like to focus on a specific asset class. It helps me to really understand the macroeconomics of it. I can understand the movements of it better. I don't like to trade like everything and anything. Focusing on a particular, having a specialty is definitely best in trading too. So unfortunately, guys, I'm unable to really help you guys out there. It doesn't mean that smart money doesn't work in commodities or indices or cryptos or stocks. It does. I mean, everything moves based on liquidity and volume. I just like Forex better. That's just me. All right. I think that will be all. Any other last minute questions? Maybe I'm sorry. There's just so many comments here. If I did not get your question or answer your question, please just message now so I can answer it. What currencies do you focus on during New York session? All the major currencies: EU, NU, AU, GU, UCAD, UJ, USHEF. Because when you think about it, the U.S. trading day or the U.S. trading session, or the business day for the U.S. is between the hours of about 8 to 5 p.m. Eastern Standard Time. So, pairs like Canadian dollar, U.S. dollar, those are going to move the most during the New York session. Stuff like euro and pound and Swiss franc are going to move more towards London session because those currencies are being exchanged during that business day in the Eurozone. All right. Any last minute questions, guys, before we hop off today? Thank you guys for staying on. It's been a little over an hour and 15 minutes. Yeah, I appreciate you all. Thanks, Austin. I appreciate your time today, guys. I'm going to be really waiting for FOMC to run its course today in, say, about 5 hours from now. Just want to see how that plays out. I know it's probably going to produce a lot of volatility. Probably we will see some good setups towards the end of the week, hopefully. Just going to sit on my hands for now. Not too much forming, and not many things are hitting all of my confluences, so it's best to just be patient. I appreciate the support, guys. Thank you guys so much. Hope you get a quick recovery. Yeah, I'm hoping so. Just have a little bit of a cough left, so not too bad. But yeah, guys, I think I'll probably be doing a live session this Sunday. I won't be through the Trading Nut community. It'll be just through Ariel Fx. I'll send you guys the link a few days prior, so you guys can get ready for that. But yeah, I love doing breakdowns on the weekend. It's usually a lot to go over. I can spend more time answering questions. But yeah, just remember for future reference, I only really trade Forex. So if that's something you don't really trade, then unfortunately I can't really help you there. But if you enjoy our breakdowns and want to learn more and want to really work with us one-on-one to help you reach your individual goals, we do have that program specifically for that, and we do try our best to help you guys get funded. That's really our ultimate goal here within our program as well. So book a free call on our website. We'll be glad to talk to you more about it, see if it's the right fit for you going forward. The call is free. You get our proprietary trading plan just for booking a call. So that could definitely be of value. But yeah, guys, I appreciate your time. Thank you guys so much. I'm going to end the live session now. Have a great rest of your day. Enjoy the weeks. Trade safe. Use good risk management, and we will talk to you all later. Have a good one. Take care, guys.